Hello, and welcome back to the channel. I'm Algabot, and today we're taking a close, educational look at an expert advisor for MetaTrader 5 called Harami Boundary Reversal. This strategy blends two classic price action ideas, the Harami candlestick pattern and a recent support and resistance boundary, with the average true range guiding its stops and targets. Over the next few minutes, we'll explore how the EA reads the chart, how it defines its entries and exits, and we'll walk through the actual code together. Remember, this is for educational purposes only and not financial advice. Let's get started. So what exactly does this expert advisor do? At its heart, Harami Boundary Reversal is a price action reversal strategy. It doesn't rely on a traditional oscillator or a moving average crossover. Instead, it reads the raw geometry of the candles themselves and combines that with a simple, objective map of recent support and resistance. The core pattern it looks for is the Harami, a two-candle formation where a large candle, called the mother, is followed by a small candle, called the child, whose body fits entirely within the mother's body. On its own, a Harami is a classic sign that momentum has stalled. But this strategy adds an important filter. It only acts on a Harami that forms right at a meaningful level. The mother candle must drive into a recent range boundary, the highest high or the lowest low of the prior look-back window, before the stall appears. The one indicator working in the background is the average true range, or ATR. ATR measures how much the market is currently moving, and the strategy uses it to keep everything proportional. It defines how strong the mother candle must be, how close to the level it must reach, how far the stop sits beyond the pattern, and how distant the profit target is. Because all of this is built purely from bar geometry and ATR, the strategy is timeframe agnostic. It runs on whatever timeframe you attach it to. A natural home might be euro to US dollar or gold against the dollar on the 30-minute or 1-hour charts, where range edges are often respected, and these exhaustion Harami pairs appear with some regularity. In terms of who it suits, this is really for the patient, rules-based trader who likes clearly defined, mechanical setups rather than discretionary judgment. As always, this is educational information, not a recommendation. Let's break down exactly how the EA reads the market. First, it works on a closed bar basis. On every new bar, the strategy checks whether a fresh candle has just completed, and only then does it evaluate. This avoids reacting to the noise of a still-forming candle. It also makes sure there's enough price history available to measure both the recent range and the average true range. The strategy then looks at the two most recently closed candles. It calls the older of the two the mother candle and the newer one the child candle. The mother represents a strong, conviction move, while the child represents a sudden stall. To qualify as a Harami, the child's body must sit entirely inside the mother's body. The child's body high must be at or below the mother's body high, and the child's body low must be at or above the mother's body low. On top of that, the child's body must be small relative to the mother's. By default, it must be no larger than 55% of the mother's body. The mother itself must be a meaningful move, measured against ATR. By default, its body must be at least 60% of 1 ATR. Next, the EA measures the recent range boundary. It looks back over a window of bars that come before the mother candle, 20 bars by default, and records the highest high as resistance and the lowest low as support. Crucially, this window stops just before the mother, so the level is true structure that existed before the drive. Now the conditions come together. For a short signal, the strategy detects a bullish mother that pushed up and reached close to resistance, within a proximity buffer measured in ATR, followed by the Harami stall. The EA then signals a sell. For a long signal, it detects a bearish mother that pushed down and reached close to support, again followed by the Harami. The EA then signals a buy. Risk is defined structurally. For a short, the stop is placed above the highest point of the pattern, plus an ATR buffer. For a long, the stop sits below the lowest point of the pattern, minus that buffer. The take profit is a fixed multiple of ATR away from entry, 2 times ATR by default. Only one position runs at a time, and from there the stop loss, and take profit manage the exit. Let's look at the actual MetaQuotes code running inside the expert advisor. At the top are the input parameters you can adjust in the strategy tester. RangeLookback sets how many bars define the support and resistance window. ATR period controls the ATR length. MinMotherBodyAtr and Harami max ratio shape what counts as a valid Harami, how strong the mother must be, and how small the child must be. Proximity ATR decides how close the mother must reach the level. SL buffer ATR sets the stop cushion, and TpAtrMult sets the profit distance. Lots is the fixed trade size, and magic tags the EA zone positions. Below that are the two signal blocks. The short block checks that the mother closed above its open, meaning it was an up move, and that the mother's high reached within the proximity buffer of resistance. When both are true, the EA reads the current bid price, places the stop above the pattern high plus the ATR buffer, sets the take profit to ATR below entry, and calls trade.sell. The long block mirrors that. It checks that the mother closed below its open, a down move, and that the mother's low reached close to support. When that holds, the EA reads the ask price, sets the stop below the pattern low minus the buffer, places the take profit to ATR above entry, and calls trade.buy. Notice how both sides derive everything from candle geometry and ATR, so the logic adapts to whatever time frame you run. Now let's walk through this illustration step by step. On the chart, you can see two horizontal reference lines. Recent resistance up at 1.0888 and recent support down at 1.0824. These are the highest high and the lowest low the strategy measured from the bars before our setups. Watch how price respects them. On the left, price is drifting down inside the range, pulling away from resistance and heading toward the support shelf. Then we get the first key candle, a wide bearish candle that pushes down with conviction and reaches right into support, near 1.0824. This is our mother candle, a strong down move into a level whereby orders are likely resting. The very next candle is small, and it opens and closes entirely inside the mother's body. That's our Harami, the bullish Harami at support. Notice what it means. The sellers drove price all the way to the floor, but on the next bar they couldn't extend lower. Range collapsed exactly at support. That stall is the signal the strategy is waiting for. So on the following bar, the buy entry marker appears and the long position opens. The stop loss sits just below the lowest point of the pattern, a little under support with an ATR buffer. So if price breaks the floor, the idea is invalidated cleanly. The take profit is set a fixed 2 times ATR above entry. From there, watch price climb. Candle by candle, it works its way back up through the middle of the range, and a few bars later it reaches the take profit target. That completes the long trade, a stall at support, an entry, and a measured move back into the range. Now price pulls back slightly, and then builds the opposite setup near the ceiling. A wide bullish candle drives up with conviction and tags recent resistance, near 1.0888. That's the mother candle again, this time an up move into the level. And once more, the next candle is tiny and sits completely inside that mother's body, a bearish Harami at resistance. The buyers pushed into the ceiling, then immediately ran out of room. Momentum stalled right where opposing orders sit. On the next bar, the sell entry marker appears and the short position opens. The stop loss is placed just above the highest point of the pattern, plus the ATR buffer, comfortably above resistance. The take profit is set 2 times ATR below entry. Now follow price down. It rolls over off the level, prints a series of lower candles, and works steadily toward the target, reaching the take profit a few bars later near a fresh low. So in both cases the logic is the same idea, simply mirrored. A strong candle drives into a known boundary. The next candle stalls inside it, and the strategy positions for a move back into the range, with the stop tucked just beyond the pattern and a target measured in ATR. The reward to risk is shaped by that 2 times ATR target against the buffered stop. This is an illustration of the mechanics, not a prediction. In live markets, price can and does push straight through these levels, and losses are part of trading. That brings us to the end of our breakdown of the Harami Boundary Reversal Expert Advisor. We covered the core idea of fusing the Harami candle pattern with a recent support and resistance boundary, how the EA confirms the mother and child candles, how it measures the range, and how it sets its stops and targets using ATR. We also read through the actual MetaQuotes code for both the long and the short side. Remember, everything here is educational information only, and not financial advice, a recommendation, or a solicitation to trade. Trading carries real risk, and losses do occur. If you found this analysis helpful, please like the video, leave a comment with the strategy you'd like us to break down next, and subscribe for more MT5 strategy analyses. You can find more at algobot.live. Past performance does not guarantee future results. Trade responsibly.